Markets hate uncertainty, but lately they have learned to live with it, especially when it comes from Donald Trump. Wall Street even has a nickname for its trade war strategy now, TACO. No, not this taco. This is Trump's taco. Short for Trump always chickens out. Because when tariffs are threatened, markets fall. When Trump passes, they rally. It's not random. It's a pattern we have seen from China to Greenland. I am Abhirami Sekar for TheFederal. The cycle became undeniable in April 2025. Trump posted, "This is a great time to buy DJT." Hours later, he announced a 90-day pause on tariffs for all countries except China. The reaction was instant. The S&P 500 surged 9.5%, market regaining nearly $4 trillion in value. When questioned by a CNBC correspondent during a heated Oval Office press conference on May 28, 2025, Trump called the taco label nasty, insisting his threats are leverage that force deals. And to be fair, he cut China tariffs to 30% for 90 days during talks, a massive drop from the 125% and in some cases 145% levels. He had spiked them to just weeks earlier in April. But the threaten then retreat script kept repeating itself. With Canada and Mexico, he announced 25% tariffs over fentanyl imports, suspended them for 30 days, and eventually exempted USMCA compliant goods entirely. With Europe, a proposed 50% tariff was delayed to July 9, 2025, sparking a massive relief rally. Even auto tariffs were softened via executive orders that allowed manufacturers to offset cost based on US content. From Colombia's flight ban dispute to reciprocal tariffs on 90 nations, which were delayed from April to July, then to August, the pattern is consistent, giving observers good reason to suspect that Trump's seemingly insane tariff moves were always a deliberate step to manipulate the market. It happened so often that Wall Street developed a specific timeline to trade around it. Traders realize that the panic usually starts on a Friday and the profit comes by Wednesday. Here is the playbook. It begins on a Friday with a cryptic post. Markets drift lower. Trump announces a big number, often 25%. He doubles down over the weekend while markets are closed to maximize pressure. On Sunday evening, futures opened lower on panic, but by Wednesday, dip buyers step in. They know the tariffs are weeks away. A week later, officials like Treasury Secretary Scott Bessent appear on TV to reassure investors. A deal is announced and markets hit new highs. Let's see what he did with Greenland and EU tariffs. Following NATO talks, the February 1st tariffs were scrapped. Trump celebrated an infinite and forever framework deal. The reality? NATO Secretary General Mark Rutte said Danish sovereignty wasn't even discussed. It was chaotic. Trump confused Greenland with Iceland, floated a board of peace to replace the UN, and hinted he might not honor NATO's Article 5. Critics called it another taco moment, a threat, a rattle, and a retreat. But the markets loved the retreat. From Wall Street to world capitals, the lesson is clear. Trump's tariff strategy is less about trade and more about market psychology. So, when the next threat comes, investors won't ask if he will act. They will just wait for the pass.